Welcome, folks, to Crypto News Global. I'm your host, Nick Toka, and Bitcoin is down today on the back of new tariffs put in place for steel and aluminum, 25%, and that's a global tariff for all countries by the U.S. On today's show, U.S. Customs reportedly stalling Bitcoin miners ship more shipments amid crackdown, and this also has to do with tariffs. Tether slams JPMorgan analysts for saying it may need to sell Bitcoin. We were talking about this story yesterday. Also on today's show, Cathie says chances of 1.5 million Bitcoin price have increased, and here's why. Additionally, we are going to give lots of tips on creating wealth on your way to becoming a millionaire, folks. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 13th, 2025, and Bitcoin in the red, definitely on the back of the new tariffs that are being imposed by the U.S. for aluminum and steel, and that is a global tariff on all countries. So that's going to be implemented as of tomorrow, I believe, and this time it is a real thing. So if we see Bitcoin down a little bit, I wouldn't be surprised. Do I expect that it's going to fall more? Potentially, but the fact that it's only dropped, a little bit, couple percent, on the back of these global tariffs is probably a good sign. As I've said before, it's going to get to a point where the crypto market is just immune to new customs and geopolitical risks, and in fact, it's going to thrive on these risks. Let me get into something we want to talk about, and that is your financial literacy. We're going to talk about how to make you rich, folks. Let's go with some tips on creating wealth on your way to becoming a millionaire, and it's definitely doable. Here's some step-by-steps, which I've also included in these show notes, on a guide to build wealth and reaching millionaire status. And this is not some bullshit that somebody's going to sell you. I'll never ask for a penny from anybody. It would be nice if you subscribed on my path to 500 subscribers. However, this is not a money thing. Don't let people scam you by taking your money and telling you, hey, this is how you get rich, because I'm giving you the information right here, right now. So, number one, master financial literacy. Understand the basics: income, expenses, assets, liabilities, and investing. Read books. Rich Dad, like the one we have in our book of the week right now in the notes. The Millionaire Next Door. Follow financial experts and take online courses on personal finance. This will, and of course, listen to shows like mine. Set clear financial goals. Define your millionaire timeline. I want to be a millionaire in 10 years, 20 years, 30 years. Break it down into achievable milestones. My first 10K, my first 100K. Set SMART goals: specific, measurable, achievable, relevant, time-bound. Don't bullshit yourself. Be honest with yourself. Step 3, increase your income. If you can maximize your 9 to 5, by all means, get promotions, negotiate raises, or switch to a higher paying career or a higher paying job. Develop high income skills. Coding, you can do this a lot now with the aid of AI. OpenAI is a pretty good coder. Claude is considered the best coding programming, and pick it up, open it up, take some online courses, and within hours or days, you'll be coding. Do sales. Salespeople end up making a lot of money. It might not be something that's down your alley, but if you practice and you're good, you will make a lot of money. Digital marketing. Create some books. Sell them. This is something that will make you money while you're sleeping, and it's eternal. You just create it once, you put it out there, and it just continues to make money while you sleep. Even if it's a $2 thing, you sell a $2 article and you sell it a million times, well, you made $2 million bucks. Investing. Start a side hustle. Freelancing, consulting, e-commerce, content creation. Invest in yourself. 100%. I've been talking about this all the time, guys. At the end of every show, continue learning. It pays off exponentially. Live below your means. Follow the 50-30-20 rule. 50% needs, 30% wants, 20% savings and investments. Cut unnecessary expenses. Avoid lifestyle inflation. Avoid debt, except for good debt like real estate, business investments, or financial investments. So I mentioned yesterday, we talked about, people who are trying to pay off their credit cards, get out of debt. Well, I don't have any money, and I've suggested that every single person I've talked to where we've gone through their assets and liabilities and their monthly expenditures, we've always been able to find something that they can cut out that they don't even notice when they cut it out, because it's something that was just some little inconsequential thing they used to spend money on, and hey, suddenly I have $200 more a month. Save and invest aggressively. Have an emergency fund. They always say, you've heard this a million times, guys, that emergency fund is important. Save 3 to 6 months of your expenses. This is not considered part of your investment strategy. This is considered separate. As I mentioned, have separate accounts for these things. High interest online savings accounts, not brick and mortars, is a good way to go. And I've already mentioned how go through the fine details on these accounts, because a lot of them will say, oh, we'll give you 5% interest. And when you look at the fine detail, it will say 5% interest on more than $1 million in your account. And when you really drill down, it's like 0.5% on anything under 250 grand. So, but there are some that actually offer 4 or 5% on any balance. So look it up. All that information is online. Just look up high earning savings account, online savings account. You'll get 100 that come up, but you should get some lists of people that have already done the work for you. Go through their lists, and then also when you get the names of some, go to their actual websites, the financial institutions, and find where their interest rates are, where their deposit limits are for interest rate, and make sure you make a good call. Open multiple accounts on these online savings accounts. One for example, your emergency fund. One for things that you're saving for. I'm saving for a mortgage. There's another account. I'm saving for a car. There's another account. I'm saving for education. There's another account. And of course, separately, you're going to have a investments account. And all these things can be done. So your bricks and mortars account, which still has some utility and use, your checking account that you should have in the brick and mortar, will distribute automatically to all these other savings accounts. You can set it up all automated, guys, so you don't even have to think about it, and before you know it, you'll start to have a lot of cash. Don't fuck around and dip into your other accounts. If you've got an account for mortgage, account for car, account for holiday, and your investments account, and suddenly your investments account is doing great, don't dip into it and say, oh, but I want to go on vacation now, right? No, keep that separate. And if you have to have a bit of a longer term horizon where, oh, I can't go on vacation right now, it'll have to be in 3 months, or it'll have to be next year, then by all means, it's worth it, because you're investing in yourself here. Invest in index funds. If you can use these tax sheltered accounts to also invest in ETFs, this is part of your investment portfolio. Index funds, I recommend Vanguard's Total Index 500. It invests in every stock on the S&P 500, and the MER is a mere 0.03%, and you get 8% dividend on top of that. It's definitely the best thing going. If you must, if, people are talking into it, if people tell you that you're crazy, your spouse is bugging you, okay, maybe you can go into some growth stocks, but I would highly recommend just go into an index fund. If you don't know anything and you don't want to learn anything about investments, go with something called the term slips, life cycle funds, I believe they're called, which basically will automatically change. They ask you a bunch of questions. How old are you? Okay, I'm 30. I want to invest this much, and they'll basically invest specifically for your age. So in your 20s, they'll be risky. In your 30s, maybe a little less risky. 40 less. And once you get to 50 or so, then it'll be more automatically saving into bonds, which are less risky than stocks. Something to look into if you want to go the lazy route. I recommend you learn yourself, and this will help you make good decisions. If you can invest in real estate, by all means. Rental properties can generate massive income if you can get to the point where you can buy some rentals. Business, start or invest in a profitable small business or big business. Build multiple streams of income. Earn money from different sources, jobs, side hustles, investments, passive income, like stocks, real estate, royalties, online business, and dividends. And if you don't know anything about any of these, don't try to learn them all at once. Pick one. Become somewhat well versed in it. Then jump onto the next topic and jump onto the next topic. And before you know it, you are financially literate. And a good tip for books: you spend your time wisely, I keep saying. So part of that, where do you read? Who's got time, right? Well, I gave up. I used to listen to the same playlist over and over, in the car, singing along, trying to stay awake sometimes, singing at the top of my lungs, driving home, and same playlist pretty much all the time. It changes over the years, of course, but ultimately it was the same music. I stopped that. It's been a couple years now since I've actually listened to music in the car. Instead, what I do is I find the next great book that I want to read. And I don't read freaking romance novels and listen to this crap. I listen to things that are going to help me, things that are educational. The best all-time books historically for basic economics, for finance, these are the types of books I search for. And as you're driving, half an hour a day, 2 hours a day in some cases. And for me, I used to have to go all across, I used to have to drive hours to do, network installations. So I would literally plow through a book on, one installation. So you can get a lot of stuff into your brain, new information that'll help you, that'll make you smarter. It's inevitable. You read or you listen to enough things, you're going to get smarter in whatever area that you're spending your time with. Spend that time wisely. Listen to it in the car. Listen to it, I've heard someone say, well, you've got to go to the bathroom every day. Spend that 10-15 minutes reading. Right? I don't. It's a little gross, with your phone. However, I've certainly had books on. You get in the washroom, you already have it on, you don't have to touch anything, you're not dirtying your phone, you finish, you wash your hands, you grab your phone again, all while learning. Crazy, right? But 15 minutes a day, 20 minutes a day, 1 hour a day, and multiply that over the year. If you could do an hour a day or 2 hours a day while driving, then suddenly you've gone through 700 hours of books. This is like 70 books. So I highly recommend going that route. It will help you get not only more information in your mind, it'll help you get into the right mode and wanting to save and wanting to build wealth. Protect and grow your wealth. Diversify your investments to minimize risk. Work with financial advisors or tax strategists to optimize wealth. So if you get to the point where you're really raking it in, you've got a lot of money, maybe you want to talk to financial advisors, you 100% want to talk to tax strategists. Until then, I would probably suggest you just stick with index funds. You stick with dollar cost averaging, putting a little bit of money in every week, automatically, of course. If you can't do it, or if you can't set up your automatic withdrawals into your investments every week, do it every month. Once a year, go back into your strategy, adjust things so they fall more in line with whatever the next year might take, or your money's changed, you make more money, you make less money, you are planning on having a trip sooner than later. Well, you need to make these adjustments to these accounts that are automatically are pulling money out of your checking account and going into whatever other account. You don't need to play with it much. Once a year, and don't do it on the first of the year. You know why? Because everybody does it on the first of the year. So pick whatever time is good for you. You're a week after your birthday, this kind of thing, and keep consistent. So on a week after your birthday every year, go in, make changes. Slight changes is probably all you'd ever have to do to these different investments, and think long term. I can't stress this enough. This is probably the number one tip. Think long term, stay consistent. This is the key. Building wealth takes time. Stick to your investment strategy, avoid panic selling, keep learning, keep adapting, and making smart financial decisions. If things tank, the next Black Friday or Black Monday, you know what? When everybody's selling, that's perfect. That's your time to buy. Everything's on sale. So, when things are tanking, buy twice as much. It's the same with the crypto investment strategy. Buy the fucking dip, right? That's the saying. So, buy the dip. And that counts both in traditional financial markets and for crypto. Let's get right into our Bitcoin market watch and Bitcoin technical analysis. Hopefully the information I gave you makes sense and is helpful. I know it is. Slow it down, go back to these points that I made, and just try to ingrain it. If you need to listen to it a few times, by all means. And just remember, you're doing great even if you make a small progressive step. A wise way to look at it is, let's say you're going to start working out. I want to work out. Start working out today, right? I'm going to do 100 push-ups today. Are you? Well, if you say to yourself, I'm going to do one push-up, you're going to do it. If you say you're going to do 100, there's a good chance that's not happening. But if you do one, then you'll do it. And then tomorrow, you'll do one. And tomorrow, the day after, and the day after, you'll get that one push-up in. You might not get 100 in, but what that's doing is that's creating new neural connections in your mind. Let's go deep here, guys. What you're really trying to do is repetitions. Okay? Anything in life, the more reps you get in, the more you're going to create these new neural connections in your mind, the more it's going to become automatic. A good example, I was reading where, this is all coming out of the 80s, when at one point everybody thought you were born with whatever brain you had, and that was it. But then they started learning that the elasticity of the brain, which basically means your brain is constantly changing. So they did more research into it, and then they thought, oh, well, if you do something long enough, and they did this, they had brain scans going, and they had somebody do something new, and suddenly these new neural connections, these new strands in their brain started coming together, and before it was like this, they had nothing, and then they started skateboarding. Well, suddenly these new connections came like this for skateboarding. Then within a short amount of time, it got better and better and stronger and bigger. And then they figured out by around 3 weeks, you had this massive new section of your brain just specifically for skateboarding. But what they found more recently is it's not this 21-day thing. They used to say 21 to 30 days it takes to create a new neural connection in your mind so you can do something better, and you can find a new skill, and then you don't have to think about it anymore after 21 to 30 days because it's already ingrained in your mind. It's these new neural connections. What they're actually finding is more recent information is it's the repetitions. So they took a bunch of photographers, and they told the photographers to one group of photographers, they said, okay, we want you to do everything and conceptualize and write down and figure out what's needed to take the most fantastic photo ever in history, right? And then they took another group of people, and they told these photographers, we want you to go out there and take as many photos as you can in a month. So at the end of the month, they both got together, and of course, the group that conceptualized and thought of all the best ways to take a picture finally got their awesome picture, and the ones that were doing pictures nonstop, hundreds and thousands of pictures, also nonstop, came back. And who took the best pictures? It was the people who practiced the pictures, not the guys who conceptually thought about it. It was the people who actually practiced it. So think of it that way. The more you practice something, the better off you're going to get. That one push-up scenario that I mentioned, it's not so you can get fit. You're not going to get fit with one push-up, but what it would do is it would get you to the point where your mind is accustomed to doing push-ups, and maybe you could get to that 100 push-ups a day much easier because your mind would then be ingrained in this push-up mode, even if it was at the beginning only one a day. Hopefully this info helps. Again, please comment and please subscribe if it does. Let's flip right into our market watch and Bitcoin technical analysis, folks. We've got Bitcoin down about 1% at 96,766 right now. Ethereum down 1.5%, 26.95. Solana down 0.5%, 196. XRP up 3.5% at $2.55. Doge down just slightly at 26 cents. We've got SUI down, looks like about 4% at $3.46. Looking at the crypto bubbles for the day, we've got XCN down 14.5%, Hex down 12.5%. Most things are in the red. We do have XRP up 3.5%, which often happens when the rest of the market is going down. When Bitcoin's down, XRP's up, and vice versa. I notice that a lot. Let's zoom out to the weekly. We've got Cake, the big winner, at 102%. On the plus side, PLSX up almost 50%. Hex up 40%. Zooming out to the monthly, the XCN coin is the clear winner for the month, 725%. Ultima up 113%. Ohm up 51%. A lot of red for the month, though. Doge down 26%. SUI down 23%. XRP down 8%. Quite a bit in the red. Our crypto market cap, Bitcoin is currently sitting at $1.92 trillion. Ethereum is at 325 billion. XRP is at 147 billion. Solana 96 billion. Doge 39 billion. Cardano 28 billion. And rounding up the top 10, we have Tron at 20 billion. The total crypto market cap right now is sitting at $1 3.15 trillion, and we have Bitcoin with 61% of the dominance. Ethereum at 10.32% and dropping as we speak. XRP at 4.7%, up a bit. And interestingly, Solana's been not even on the list anymore. BNB has gone above them at 3%. Crypto Fear and Greed Index, currently we are at a 48 in neutral. Yesterday was a 50 in neutral, and last week a 44 in neutral. We have 1,010 days approximately until the next Bitcoin halving in 2028. There are 166,338 blocks left to mine until that time, and 1,176,057 blocks to mine until the final block is mined in the year 2140. Total assets by market cap globally, we have gold getting very, very close to that 20 trillion mark, 19.85 trillion right now, up 1% today. Apple at 3.6 trillion, Nvidia 3.3 trillion, number 3, Microsoft 3 trillion, Amazon 2.4 trillion, Google 2.27 trillion. There's the biddy at number 7 at 1.912 trillion, silver 1.856 trillion, Facebook right behind them. So silver's flipped Facebook the other way. It was Facebook had climbed above silver for a couple days anyway. Facebook at 1.845 trillion, Saudi Aramco 1.794 trillion. Tesla's flipped again. Broadcom at 1.14 trillion in the number 11 spot. You can currently get 1,034 satoshis for one fiat crap dollar, and the current total debt, U.S. debt, is 36,476,565,000,000, which equals 107,194 per U.S. citizen and 323,047 per U.S. taxpayer. And that's what we care about most, is the U.S. taxpayer, because the citizens, it seems, as they kick out more people, there's going to be less and less citizens. Speaking of crackdowns, we have a bit of a crackdown at the U.S. border right now when it comes to mining. U.S. Customs reportedly stalling Bitcoin miner shipments amid crackdown. Executives say the U.S. Customs and Border Protection is targeting Bitmain-related shipments, which sucks because that's the best shit, guys. U.S.-based crypto miners are facing delays in receiving ASIC mining hardware due to intensified security scrutiny of shipments from China's Bitcoin, the dominant supplier of, from China's Bitmain, they must mean, the dominant supplier of Bitcoin mining rigs. As Bloomberg News reports, industry executives said shipments of Bitmain machines have been held up due to increased scrutiny by the U.S. Customs and Border Protection. The timing aligns with the U.S. Commerce Department's January blacklisting of Xiamen Sokfo Technologies Limited, an AI firm affiliated with Bitmain, accused of furthering Beijing's ambitions in advanced chip production. These delays also come amid escalating trade tensions between U.S. and China. The latest seizures and import hold presents a notable escalation from the CBP's detainment of Antminer S21 and T21 units last year. Damn. Mounting regulatory pressure, Bitmain, which controls roughly 90% of the global market for specialized Bitcoin mining rigs, has been subject to U.S. tariffs since 2018. And what I can tell you is, if you're in China, or I think even in Europe, these things are much cheaper if you, and this is not new, you can see this right on the Bitmain website. If you're getting the shipment to the U.S., I believe it is a 100% tariff, the increase in price they put these. It's either 50 or 100%. It's been around like that for a long time, which is, another cheap move on China's behalf. So they don't want Americans using their equipment, which it definitely mines a lot more than any other ASIC miner, and certainly a lot more than any video card. Bitmain, which controls roughly 90% of the global market for specialized Bitcoin mining rigs, has been subject to U.S. tariffs since 2018. There you go. On February 1st, President Donald Trump announced an additional 10% levy on Chinese imports, further implicating the landscape for miners reliant on Bitmain machines, which is basically all of them. Nuo Zhu, founder of China Digital Mining Association, said U.S. Customs has started randomly inspecting almost all airlifted Bitcoin mining machines since about 3 months ago. He added that officers are scrutinizing machines more closely and demanding certificates of origin, further delaying shipments. A source familiar with the situation disclosed that an Oklahoma-based mining operation with 2,000 rigs has been significantly delayed due to a stringent customs checks. Luxor Technology COO Ethan Vera said shipments with Bitmain labels are among those targeted by customs. And let me just tell you guys that these Bitmains are not cheap. If you want the newest one, you're talking like $30,000 to $50,000. There's other old shitty ones that you can get, used, whatever. You can maybe $1,000, $2,000. But if you want what the large companies are buying, the big miners, you're talking $40K. Taras Kulik, CEO at Syntec Digital, a major mining hardware broker, said heavier tariffs would essentially halt the importation of new generation hardware into U.S., making it completely cost prohibitive. There will be a ton of projects that will cease construction because they wouldn't be able to get the hardware. Impact on U.S. mining. The fresh tariffs have already had a measurable impact on U.S. mining industry despite its remarkable growth in the past 6 months. According to CBP data compiled by the Miner Mag, the gross weight of imported Bitmain mining rigs and accessories plummeted nearly 65% year over year in January 2025. The inability to secure new equipment at competitive prices could undermine the long-term viability of U.S. mining firms. New York-based Bit Digital recently experienced a 2-week delay on a shipment of 700 mining machines, a relatively minor setback, according to CEO Sam Tabar. However, others are facing steeper challenges. The regulatory pressure also threatens Bitmain's domination as competition from China-based MicroBT and California's Auradine is mounting. Oh yeah, made in the USA, baby. I didn't even know that existed. So here we go, competition. So if there's an American alternative, I'd like to see the spec on these things. Auradine. Vera warned, I would expect any company buying Bitmain machines is going to be at risk right now, including the public ones. In an effort to deal with current situation, Bitmain recently launched a domestic production line in the U.S. to counter the import-related challenges for its machines. This is exactly what Trump wants, right? If you want to avoid the tariffs, build your factory in the U.S. and then that way you avoid the tariffs and the Americans get the jobs. Interesting. So the rollout of the Antminer S21 Pro from the new U.S. facility is expected to provide miners with a much-needed boost in efficiency and reduce operational uncertainty. Good. So that's great news on the mining front. The cost of these things, and additionally the import fees from Bitmain has definitely kept me away. I've always wanted one to start with because it's a great business model. You buy one, you mine, and then with the money you mine, you buy another one, and so on and so on. And I did this when mining first started just with video cards, and it was basically money in the bank. So the fact that Bitmain now has a U.S. facility and California's Auradine is a new company that's competition to Bitmain is very interesting. Things could be changing for the better in the very near future. Maybe I can finally afford one of these things. It's just tariffs. The cost of these things is just insane. Knowing the cost of a ASIC chip, I'm a computer guy. Basically, it costs like $1 for an ASIC chip. Like, it costs fuck all, people. However, these guys are charging 40 grand for their equipment. Why? Because you can make so much money off it. Well, yesterday we had a story about JPMorgan Chase, which is always, one of those companies that we definitely don't trust around here. And they're always saying one thing and doing another thing. And they're always, last year they were crying how, Bitcoin is the usual, used for scams, used for this. And now suddenly, they're investing in Bitcoin. There was a story out of Britain where they stopped allowing their customers to have Bitcoin in their Morgan accounts. However, at the same time, they were double dipping because JPMorgan was actually buying Bitcoin. So they're basically saying, citizens, you can't buy it. However, Chase was buying this stuff on the low. So I don't trust anything. They have been fined, I think it's into the hundreds of millions of dollars for over the past few years for manipulating the commodities and gold markets. So do not trust these scums. So here, Tether fights back after the story we had yesterday. Tether slams, yeah, baby, JPMorgan analysts for saying it may need to sell Bitcoin. Tether criticized analysts at JPMorgan who speculated the issuer may need to sell its Bitcoin holding to comply with newly proposed U.S. stablecoin bills. Tether, the operator of USDT stablecoin, has slammed JPMorgan analysts who suggested it may need to sell Bitcoin to comply with proposed stablecoin regulations in the U.S. On February 12th, yesterday, an analyst team led by Morgan strategist Nicholas Panigitsoroglu released a report suggesting the proposed U.S. stablecoin bills could force Tether to sell some of its Bitcoin holding. This would imply sales of their non-compliant assets, such as precious metals, Bitcoin, and purchases of compliant assets lists, such as T-bills, the analyst said in a report seen by Cointelegraph. In response to a request for comment from Cointelegraph, a Tether spokesman criticized the analyst, saying they understand neither Bitcoin nor Tether, and highlighting that the U.S. stablecoin laws have yet to be finalized. Good for you. What are the proposed stablecoin bills in the U.S.? On February 4th, Senator Bill Hagerty introduced the Guiding and Establishing National Innovation for U.S. Stablecoin, the Genius Act, to establish a federal licensing and supervisory framework for stablecoins and their issuers. The bill was co-sponsored by Senate Banking Committee Chairman Tim Scott, in addition to Senators Kirsten Gillibrand and Cynthia Lummis. Separately, on February 6th, House Financial Services Committee Chairman French Hill and Representative Brian Steele released a discussion draft on stablecoin regulation called the Stablecoin Transparency and Accountability for a Better Ledger Economy Stable Act. All these frickin' acronyms, eh? Genius. Stable. The draft Stable Act reportedly generally aligns with the Genius Act and is designed to offer the companion and the legislative process in the House of Representatives stricter reserve requirements under Stable Act. The Panigritsoglou-led JPMorgan analyst highlighted that reserve requirements under the Stable Act are stricter, allowing stablecoin issuers to only hold insured deposits, U.S. T-bills, short-term treasury repos, and central bank reserves. On the other hand, the Senate bill allows additional instruments such as money market funds and reverse repos. So basically, the stablecoin issuers, if these new bills go into effect, will need to back their stablecoin with traditional financial assets, which is a bit of a shame. Now, Tether, really the only stablecoin I trust, has backed their stablecoin with Bitcoin. So that's what they're basically saying is, sorry, you might have to sell your Bitcoin for US T-bills, short-term treasury repos, and central bank reserves. Well, you know what? What might also happen is maybe they'll be able to buy the ETF and back it with the ETF. Also, this is nothing that's actually gone into law yet, and I wouldn't be surprised if Cynthia Lummis, who is very bullish on Bitcoin and is a pretty smart lady, realizes what exactly the ramifications are here and backs off this and maybe even includes Bitcoin as one of these reserves that they can back their stablecoins with. It's certainly, to me, as sturdy a reserve as, T-bills, short-term treasuries, and central bank reserves. Like central bank reserves. So basically what they're saying is, oh, you have to lose 10% of your actual value every year because we're going to print more money, thusly decreasing the value of your bank reserves. So it's a bit of an oxymoron and a little bit ridiculous. So I don't know if it's actually going to go into law. Hopefully someone will have a bit of a light bulb moment where they can think objectively how this is a more of a detriment than it is a positive for stablecoins. Now, do I believe that they should be backed by something strong? 100%. If your stablecoin is backed by, tulip bulbs or feathers or, Venezuelan peso, well, yeah, no, it's garbage. But if it's backed by Bitcoin, yeah, I would say it's actually worth something. We've got a very bullish Cathie Wood who looks kind of cute in a bit of a nerdy way, and I'll bring up the photo here. And Cathie Wood says, chances of a 1.5 million Bitcoin price have increased. Here's why. So she's got her bullish targets for sure. She's one of the most bullish, and why shouldn't she be? She has held a hell of a lot of Bitcoin, and one of the first to hold Bitcoin before there was, BlackRock. There was ARK Invest, Cathie Wood. So ARK Invest CEO Cathie Wood says that the odds for Bitcoin to reach the price of 1.5 million have increased thanks to the increased presence of institutional investors in the Bitcoin market. Many institutional investors are now looking at Bitcoin and thinking they need to add it to their asset allocation because its return profile looks so much different and its risk profile looks so much different from all the other assets in their portfolios. Yeah, it's actually gaining ground. Institutional presence in the Bitcoin continues to expand. One of the indicators showing increased institutional presence in the Bitcoin market are Bitcoin ETF inflows. According to the data from Farside Investors, Bitcoin ETFs in the United States have seen 4.96 billion in net inflows since January 1st, 2025, with a total. So it's basically a month since, with a total cumulative flow increasing from 35 billion to 40 billion during the time period. MicroStrategy, the largest corporate holder of Bitcoin in the world, has continued its frequent purchases of Bitcoin. In their latest Bitcoin investment, Strategy bought 7,633 Bitcoin for 742 million. The purchase brought the company's Bitcoin reserves to 478,740 Bitcoin, a 2.41% of the circulating supply. And he has said, Mr. Saylor, that he wants to get up to 5% of the circulating supply. So he's more than halfway there. Interesting. Another reason to be bullish on BTC is that there's a serious discussion across the U.S. states to establish a Bitcoin reserve. And ex-head of digital assets research, Matthew Siegel, recently published a breakdown of 20 state-level Bitcoin reserve bills, noting that the laws could result in the purchase of $23 billion worth of Bitcoin. We've been talking about this almost every show, how the number of states that have created their statewide Bitcoin legislation for a Bitcoin reserve. It keeps growing. So we analyzed 20 state-level Bitcoin reserve bills. If enacted, they could drive 23 billion in buying or 270,000 Bitcoin. So altogether, they could accumulate the same as what Michael Saylor's got. This sum is independent of any pension fund allocation likely to rise if legislators move forward. Yeah, so this is strictly the U.S. states creating their own state-level Bitcoin reserve. And they're talking about 250,000 Bitcoins. And it does not include any pension fund allocation. And we all know that these pension funds are going to have to put their money somewhere to save their bloody pensions, because as it's turning, the people handling these pension funds are doing such a poor job. They could have been doing so much better all these years to actually make something of it. Instead, they've taken such a conservative, short position, short timeline position, and it's just like, T-bills and bonds. And meanwhile, everything's passing it by. They could have made the pension fund into so much. But instead, it's another failing initiative. Algorithms predict. Let's say, hey, Billy Grande, hello. Thanks for joining. Algorithm predicts Bitcoin surge to 175,000 in 2025. The algorithmic Bitcoin price prediction on CoinDex is forecasting Bitcoin to display a strong performance in 2025 and reach as high as 175,000 by August. Interestingly enough, this prediction is more conservative than some analysts, as it expects 175 to be the peak of the current Bitcoin market cycle, which will be followed by a multi-year price correction on the downside. I don't disagree with the price correction on the downside. Again, not financial advice, everybody, but if we follow the traditional trends, which we can bring up right here, the historical trends basically tell us that every 4 years, so I've got the halvings, the Bitcoin halvings marked with the vertical line, the blue lines going up and down, and we do see that there is the upswing, and then we've got the downturn on the opposite years, and the most prolific example of this is the last Bitcoin halving in 2020. We can see very clearly that we got to the cycle peak and then there was the cycle low. So I do anticipate a similar kind of prospect in this current cycle, and I really don't feel like we're, even halfway there. I've gone conservatively in going through these historical cycles, and the first cycle was 19x from the halving date until the cycle peak. The next cycle was 8x price increase from the halving date until the cycle peak. The next, in 2020, was 7x. So I've gone conservative and said, okay, this time from the halving date here, we're going to go 3x, and that comes up to 220,000 per BTC. And okay, so let's instead, we were going 8, 7, let's see 6. And if we go 6x from the halving price, we've got 376,000. So I don't disagree that there's going to be a peak, possibly even a double peak. I mean, the 2020 cycle was, looks like what, April to May was the first cycle peak, then a downturn, and then we got again to the biggest point of the cycle, which was in October of 2020. I expect something similar to happen. It's been happening for 3 cycles, so why wouldn't it happen in the 4th? So here's their chart here. I certainly anticipate that Bitcoin hasn't hit the top here. I think it's just in a consolidation phase. People are buying in. The whales are buying in, and I think we're going to see a big pump. A lot of this tariff talk and government changes have held things back. I also feel like some of the big players here are also holding things back and maybe buying Bitcoin on the low. Nation states around the world, for example, could be buying it and not saying anything, because once they do say something, then the price is going to peak and it'll go up, and then it'll be more expensive for them to keep buying. So I anticipate the culmination of many countries all at one shot saying, states will come out and say, okay, we're buying Bitcoin. And then, 10 other countries around the world will say, oh, we've been buying it for, 2 years. Hopefully, this show has helped you guys with your financial literacy. We went through many, many points at the beginning of the show, and all these points are in the show notes. So please go through them thoroughly. Feel free to copy and, learn a bit. The books that I keep posting, it's generally about a book every week, a book every 2 weeks, and they're all really to do with financial literacy, are very helpful, and I recommend, like I mentioned, if you don't have time to sit and read, then listen to them in the car, listen to them in the background. You can do two things at once, and that way you're saving time. Remember that money in the world is very abundant and money is everywhere. It's time that's scarce, so use the time wisely. Like I always try and push, spend less money than what you earn, and if you start making more money, save more money. Don't start spending more money. Start saving when you're young, and you can retire when you're 40 or 45. Don't start saving when you're old. It's never too late to start investing. If you haven't, yes, you should invest when you're old, but I'd highly recommend starting when you're young. That way you have the maximum number of years for your investment portfolio to increase, both with the dollar cost averaging you're doing with the monthly or weekly contributions and with the years. If you've got a great idea, do start that idea today. Don't wait for tomorrow. Start today, even if you're not ready. Again, I hope you found this stream very enjoyable. Please feel free to subscribe. I am on a mission to get to over 500 subscribers. So please like, share, comment, and subscribe, and we will see you on the next stream. Folks, thanks for joining.